Tesla just announced that the Cybertruck deliveries start on November 30th, and as Tesla dropped the earnings report, it dropped two bombshells together with it. But at first, it seemed like the earnings report was pretty bad, so let's go through the whole thing. The analyst consensus was 72 cents. The lowest retail estimate was 70 cents, and the highest retail estimate was $1.02. We got 66 cents per share and 17.9% margin. But we have some very exciting news about the Cybertruck. The deliveries will begin in November, Tesla says. And currently, the yearly Cybertruck production capacity exceeds 125,000. So that's pretty good. It will only go up from here. And here's the bombshell that Tesla just dropped in the earnings report. Pay close attention to this one right now. This is Tesla's average selling price, which is now down to $44,500, but Tesla's cost of goods sold are also down. In fact, the average selling price is down 3.1%, but the cost of goods sold are down 5.8% quarter over quarter. In other words, if this continues, it means that Tesla's margins will quickly begin to grow. So this is incredibly good. If you carefully think about it, you will realize that Tesla could keep dropping the price while the margins would grow. And it seems that traders also realized that at first Tesla stock dropped in the after hours, but the moment they figured out that the costs are actually being cut quickly, the stock went back up in the after hours. This cost of goods sold chart is just such a beautiful chart to look at. Now, of course, once the Cybertruck launches, the cost will go up. But the direction is very good, and that is what matters. Also, if you look at Dylan's numbers, keep in mind that his numbers exclude leasing and credits. Tesla also updated the capacity number that they provide to us in the shareholder deck for Giga Shanghai, specifically for Model 3 and Model Y, up from 750,000 to now 950,000. Tesla had positive free cash flow of $0.8 billion. Tesla more than doubled AI training compute. That's a big deal. The more compute Tesla has, the faster full self-driving will be solved. So being able to double it in such a short period of time is a big deal. So we have two bombshells so far. And here's the whole statement from Tesla. Our main objectives remained unchanged in Q3 2023, reducing cost per vehicle, free cash flow generation while maximizing delivery volumes, and continued investment in AI and other growth projects. Our cost of goods sold per vehicle decreased to $37,500 in Q3, while production costs at our new factories remained higher than our established factories. We have implemented necessary upgrades in Q3 to enable further unit cost reductions. We continue to believe that an industry leader needs to be a cost leader. During a high interest rate environment, we believe focusing on investments in research and development and capital expenditures for future growth while maintaining positive free cash flow is the right approach. Year to date, our free cash flow reached $2.3 billion, while our cash and investments position continues to improve. We have more than doubled the size of our AI training compute to accommodate for our growing data set as well as our Optimus robot project. Our humanoid robot is currently being trained for simple tasks through AI rather than hard-coded software, and its hardware is being further upgraded. Lastly, with a combined gross profit generation of over $500 million in Q3, our energy generation, storage business, and services and other business have become meaningful contributors to our profitability. And look at Tesla's cash. It keeps on growing every quarter, and this quarter is no different. Tesla now has $26 billion in cash. Part of the reason why Tesla's cash increased is because of financing activities, if you remember that from earlier. At Gigafactory Texas, we began pilot production of the Cybertruck, which remains on track for initial deliveries this year. We are expecting the Model Y production rate in Texas to grow very gradually. From its current level as we ramp additional supply chains needs in a cost-efficient manner, production of our high-density 4680 cell is progressing as planned, and we continue building capacity for cathode production and lithium refining in the US. Now, gradual production, I would say, they specifically said very gradual production. It means it's slowing down a little bit. China, other than scheduled downtime in Q3, our Shanghai factory has been successfully running near full capacity for several quarters, and we do not expect a meaningful increase in weekly production run rate. Giga Shanghai remains our main export hub. Model Y remained the best-selling vehicle of any kind in Europe year to date based on the latest available data as of August. Similar to Texas, further production ramp of the Model Y will be gradual. All right, and then you can see Tesla's market share of the whole auto market in each of these regions. Now, I think some people will be disappointed by this chart, but actually I am not disappointed at all. If you think about it, this makes so much sense. So this is the total number of miles driven with FSD beta, and you would typically want the growth to be exponential and not linear. Right now it's linear. It's very quick growth, very fast growth, but it is not exponential. If you look here from August or June, it's basically exactly linear. But if you think about it, Tesla is going to go with version 12. So would you really work on improving the legacy software? Not really. So this to me tells me that full self-driving beta really has not gotten much better in a way that will make people use it more. Because if anything, there should be more FSD cars on the road now because Tesla did deliver quite a few more vehicles this quarter. So it means that either people are not buying FSD as much as before, or people that have FSD are just not using it as much because the total number of vehicles should be higher, and yet we don't see an exponential growth, we see linear growth. That's okay because Tesla is transitioning to FSD version 12. Solar deployments declined on a sequential and year-over-year basis. That's because sustained high interest rates and the end of net metering in California have created downward pressure on solar demand. And check out this. Pay-per-use supercharging remains a profitable business for the company even as we scale capital expenditures. Tesla expects 1.8 million deliveries for this year, and they basically are still expecting 50% year-over-year growth if we track everything from 2021 basically into the future. So far it looks good here. And they also say here at the bottom, we continue to make progress on our next generation platform. We have a picture from the Megapack factory in Lathrop, California. And Tesla just produced 1 millionth Model Y in Giga Shanghai. Overall, in the very beginning when the report dropped, it looked like it was a bad earnings report, but then it became apparent fairly quickly that actually it's not all that bad. And if anything, it's actually a good report with the cost going down. Well, at least so far, the market is interpreting it this way. I, as a long-term Tesla stock investor in the long term, I want to see costs being lowered, and then I want to make sure that Tesla is working on the new products. The Cybertruck is coming now for sure in November based on the report. So overall, I am pretty happy with this report. On top of that, we have AI training compute doubling. That's really good. So overall, I am happy. And Tesla just posted this as I'm recording that the Cybertruck delivery event will be held on the 30th of November. And the good news doesn't stop here. Actually, Tesla energy gross margin was 24.4% in Q3, up 33% from Q2. That's really good, actually. This video is about buying Tesla stock, how to dollar cost average, when to buy, how much to buy, and how I would buy Tesla stock if I had a big lump sum. It is exclusively available on Patreon, and by joining my Patreon, you will get access to how much I think it is fair to pay per Tesla share each year between 2023 2033 and 2033. If you sign up for the investor tier of support, you will also get my valuation model of Tesla stock with a 45-minute video walkthrough. And YouTube says you should watch this video next, but if you haven't finished watching that discussion about the future with Elon Musk, watch this one first. My name is Matt Potius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.